You think you're going to make some money from trading, don't you? And you think this is going to be easy. Well, I got news for you. It's very difficult, but we can make it easy and pretend for just a moment. Just a moment, we're going to pretend like it is easy, and I'm going to explain it to you like a freaking dummy, right? I'm going to break down the charts. I'm going to explain it pretty much as insulting as possible, okay? Let's do it. We're going to treat you like the dummy you are, all right? Let's jump into the chart. All right, well, I got some peacocks in the background there. Let's break down how you trade, right? Guys, as simple as possible. There's a lot of fancy indicators, different lines and whatnot here and there, oscillators, the Elliott wave, there's the ICT, there's the smart money concepts. I do dumb money concepts, but the reality is we're going to break this down purely naked price actions. So the simplest, most easiest way to explain how a chart goes is it either goes up or down, right? And you need to be on the right side of it. So just because it goes up and you get it right doesn't mean you're going to make money. You have to time it, right? So if I said, hey, it's going up here and I bought up here thinking it's going to go higher, well, obviously this is going to suck when I'm in that drawdown, right? And it could still go up. But, you know, my stop loss might have been here. And what the hell is a stop loss? You might be a new trader. What's a stop loss, right? Where it's when you decide that you've not had enough, you've had too much torture, rather, right? Let's say you entered here. That's that silly old line there. Maybe we might have to dumb it down even dumber for you guys, right? If you don't understand what this little thing is, right? What I'm drawing is this is the potential trade that you could be in, right? Say you entered here. This is profits for you. This is losses for you, right? And you've decided, oh my God, that's too much to lose, right? Well, what we want to be doing is finding the direction it's going to go. We like to use trends. That's the term we use in the industry. Trend, what trend is it? What is the bias or what is the direction, right, for the day? So when we enter the market here, we can say, hey, this trend looks overall down. Why does it look down? Well, is it because it started on the left side higher than it ends on the lower side? Well, it's a little bit easier than that, right? You can use different indicators and whatnot. That's a, overarching picture. What I like to use is look at these little boxes, this cute little boxes here. Cute little guy, right? And there's orange ones and white ones, okay? The white candles mean when this price opened that candle, it was here. And when that candle closed, it was here, okay? Now, these little tinier lines, those are called wicks. So there's a body, so they're called candles, by the way, because it's a cute little term so that we can pretend like we're not losing so much money. Candles. We're having a date with candles, right? You've got little wicks here. Oh, the candle's burning on the wick. Oh my gosh, it's so cute and beautiful. No! It means that it's going down now, right? So these giant wicks generally mean, okay, price has gone here in this time frame, okay, in that amount of time that candle existed, right? So every 5 minutes, because we got the 5 minute here, a new candle is made, okay? And it went up here and then it came back down and then it closed back down here by the time that the price switched to the next candle, right? So you can see each candle opens where the last one closed, right? So this one closed here, it opens this one, right? And then it closed here, it opened here, right? So if it goes up, well, ta-da, great. That's good for bulls, right? Bulls means it goes up. Bears means it goes down, okay? So what does that wick indicate? Well, it means that price wasn't able to hold very long, right? So it's a good indication that we're going to be going down, okay? So this is going to maybe start making sense to you, okay? If we have these giant wicks, oh, you're in the know now. You know what wicks are, right? If we have these giant wicks, then maybe price goes down. And we have a giant wick here, maybe price goes up. Oh, we're starting to see some information that might be useful, okay? I have a whole course that's more advanced stuff, but this is going to be the dummy stuff. Super dummy stuff, okay? So maybe we're going to start a ultra dummy course, trading for dummies, okay? We're going to do that. So here's another indication, okay, of where price might give you an idea of where it's going to go. Because all we're doing is we're betting on what direction it's going to go. See, we don't care about the project. We don't care about nothing. We're betting on what direction it's going to go. And we only care about what's the next direction it's going to go. Because what did we talk about at the start? We said, hey, if we entered a buy here, or a long, as we like to say in the trading world, longs, I don't know why it's longs, and shorts is for the downside, okay? We were wrong, right? So maybe we decided we were wrong here and then it still ended up going right. We need to really time the market properly. So how do we base times, right? Well, maybe you can look at price data in the past and we can say, hey, there's a high here that it rejected from before. So maybe we want to draw that as an area of interest, right? And we want to see a reaction that tells us that the momentum is going the other way off of that. And what's the best indicator for momentum? These little candles. The cute little candles that are burning on both ends that causes the momentum to go down. Now, the bodies generally mean it's a strong trend in that direction if it's large body, right? And again, guys, there's more nuances to this. These are most simplest ways to start. So generally, when you're getting clean bodies, big blocks, means it's going to continue probably, okay? Let's change the time frame. There's a time frame up here. Now each candle is now worth 1 hour, okay? So I'm going to show you, it's going to get very complicated when you look at all of the time frames. Now we have, okay, there is a candle. Let's assume that this candle just printed, okay? It just closed, right? So what we might think is say, hey, this is a range that price like to stay in for quite some time. And I'm going to drop it down to the 5 minute and you can see, hey, that area liked it for quite some time, okay? There was a lot of volume in there. Why? Because we see this block that was just idling in this zone for about 3 hours, okay? So after we break down, well, what can we assume is we can say, hey, that's probably a good sell because price was there before and we just determined that we are going down, right? Because we just had a strong candle break down from there. A lot of people agreed because we saw price come up on these wicks and it reject immediately, okay? It went straight back down. So we're gonna drop down the 5 minute and you can see, boom, it touched that area and dropped very quickly. So everyone's agreeing with you. The next time it comes back up, it could be the same thing. It could reject again. And there's a lot more to it, guys, but that's the simple stuff for now. Follow for more. Thanks for watching.